And welcome back to our podcast with Michael Pinto. I'm your host, Lance Roberts at realinvestmentadvice.com. You can find Michael at pentoport.com. That's P-E-N-T-O port.com. And of course, get his book, The Coming Bond Market Collapse. So, Michael, as we wrap up the conversation here, just a couple of things I wanted to touch on. As we're actually sitting here talking, the stock market just set a record high as we're talking. Now, this is an interesting point because we're talking about the risks to the markets. We were talking about the issue that, the collapse that we saw in November, December, the reversal of the Fed really hasn't fixed a lot of the underlying economic dynamics. Earnings, yes, companies are beating earnings, but those earnings have been lowered by 10 to 12% in order for them to beat those earnings. But everybody's very excited because, companies are beating their estimates. But forward outlooks actually are shaping up to be pretty weak as companies are talking much less about good and strong as opposed to weaker and concerning in their outlooks. Are investors completely kind of missing the boat here?
Listen, you forgot to mention the revenue growth, which is very, very low, very, very de minimis. Right. So you have 0% growth. In fact, they're actually, according to FactSet, we're supposed to have negative earnings, year-over-year comparisons for Q1 2019. So as to why anybody would pay 19 times trailing 12-month earnings on earnings that are actually shrinking, no growth at all, is beyond me. No revenue growth at all. I believe that this rally is predicated on the fact that the Fed is supposed to be on the sidelines forever now, don't you know? China is going to re-stimulate back into 10% growth per annum, which is they were responsible for 35 to 40% of all of global growth. As to how anybody believes that the nation of China can continue to pile on debt at a record pace, quadrupled in debt recently, and we talked about this in the other on the other segments, can just continue to re-stimulate by producing unproductive, massive amounts of debt and engender global growth at the rate they did after 2000 and 2008 is beyond me. So you're not going to get that. Europe is stuck around no growth. Japan has no growth at all. So I think maybe you're going to have to wait till Q3 rolls around when you see that the big hockey stick in earnings per share growth, always predicted by Wall Street, does not materialize. Right. If that's the case, you're going to have a global economy and equity market that's way over its skis and that needs to correct. That's my base case scenario. Well, but you have to model and protect for that. You can't just blindly own cyclical sectors of the economy, hoping that once again China is going to rescue global growth. It's not going to happen.
Well, and I think it's interesting, though, let's go back and just touch on one thing real quick. And let me just kind of play the foil here just a little bit, because, again, people with money invested in markets are going, yeah, but I just heard Larry Fink from BlackRock on television talking about a melt up in the markets because, well, people just have to get in. And look, it's not entirely wrong at this point, because we just saw in the month of March individual investors piling back into equities, after having sold all their equities in December. So it's this fear of missing out, that's kind of pushing the market, to your point. They're using these excuses of China stimulus and this and that and trade wars and all this as reasons to pile in. But again, the economic facts don't really support it. Valuations don't support it. And markets can always kind of seem to do stuff that don't seem real logical.
I'm confused with Larry Fink. Larry Fink should know better. He says that investors are on the sidelines. I don't understand that. So people sold stocks to somebody in the fall of 2018. So somebody bought those stocks. So money that was in the money market went out of the money market and purchase the stocks from the person that was selling the stocks.
Can we just all say this? Mike, can we just say this together? There is no such thing as money on the sidelines. Can we just get that out there?
So if Mr. Fink is saying, well, the money went into the bond market, so it's not on the sidelines, it's in the bond market, and therefore, if money goes out of the bond market and goes into top ticking the next iteration of a bubble, then bond yields would surge.
Right.
And if bond yields surge, you can't get people running into a stock market when you're trading at, hopefully, let's say $160 per share is going to be 2018 earnings per share on the S&P 500, and you're going to have, even if you have 5% growth, you're still going to be trading at over 20 times trailing 12-month earnings at record high prices like these.
But to your
so
point,
if you have little to no growth and little to no revenue growth and spiking bond yields because the money on the sidelines is coming out of the bond market and going into the stock market, you're talking about the same thing that happened in February of 18 and in October and November of 2000, December of 2008.
But to your point specifically, bond yields ran down sharply in November, December last year. They have barely moved off of those lows. We're about 2.5% right now, 2.55. They've barely moved off those lows despite this, 3-month rally to all-time highs in the market. So the bond market's clearly not buying this rally.
Yeah. And I have to, we haven't touched on this either, Lance. Who's going to buy the $1 trillion debt and deficit, $1 trillion deficits that we have?
Right.
Per annum, as far as the eye can see. We have a $22 trillion national debt. We have deficits that are $1 trillion in the good times. The Fed is no longer participating in buying these treasuries. Okay, their balance sheet now is going to be stuck at around 3.8, 3.9 trillion when they're finished with quantitative tightening. So who's going to buy all this debt and at what price? These are the things you have. This is what I'm so concentrated on conveying to your audience, that if you are going to invest in this stock market, and I am invested in the stock market, you can't do so blindly listening to the mainstream financial media. If you're watching the mainstream financial media, you should do so on mute. But turn podcasts like Lance Roberts up on high. Turn the volume up on loud, because you're going to get more than just a superficial buy cyclical equities, buy stocks because they're about to go to a record high. I think I laid out very cogently and succinctly all of the dangers that exist out there and all of the artificial construct that has engendered this type of bull market in stocks. And you have to model and protect your investors. Not only do I want to protect my investors from the next fall of 2018 or February of 2018 or October of 2008 event or March of 2000 event, because they're coming and they're going to be coming more frequently and their duration and intensity is going to be greater. You have to model for that, because if you don't model for that, you're not only not going to be able to protect and profit from that, you're going to lose half of your money, because every recession, the last few recessions that have occurred since the year 2000 have seen at least a 50% reduction in your retirement fund. You cannot risk that happening again.
Absolutely. That is I'm just going to stop right there, Michael. That was a great conclusion to our podcast today. Look, if you want this podcast and more, get by our website, realinvestmentadvice.com. You can get this podcast along with all of our others, and we'll be posting this podcast up live on the website for you as well. Get that out to you. But also, get in touch with Michael Pinto, pentoport.com. Get his book as well, The Coming Bond Market Collapse. And, of course, listen to his podcast, which is the Midweek Reality Check at pentoport.com. So, again, thank you, Michael, for spending time with us today. Great interview. I want to have you back because this is stuff that's going to be going on. If we can come back and say, see, I told you so. So I want to have you back to do that.
My pleasure. Thank you very much.
Thanks. And we'll be back on the next edition of the Lance Roberts Show podcast right here at realinvestmentadvice.com.
You can get daily real investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at realinvestmentadvice.com.